Aloha and welcome to Java. Thank you for joining me. It's August 8th, 2024, and hopefully the sound is okay with this and not too much ambient background. However, there's quite a few things that I would like to go over. This is probably getting out a bit late, running into a few things here. So, with this, I'd like to first off thank the accountant for noticing that this is the news from the future. So, with that, let's go into what's going on with the markets at the moment. We have risk rising, not too far below 250 at the MMRI. We've also got still an extreme fear on the fear greed gauge. So, with fear, people basically are not piling into the market as much as they were prior, and we're watching some outflows. A lot of people and companies going to cash. So, with this, we've got the relative strength of the dollar also fell. It's down below 103. We've got the 10-year yield holding below. It's at 3.913 right now. We had the Treasury note auction that didn't do so well. So with that, that had quite a bit of an effect yesterday afternoon. So stocks started kind of recovering, and then after that, basically a failed auction or weak auction, it had its effect kind of rippled through. With that, I'd like to mention cryptocurrencies are still holding their strength. Bitcoin is still above 57,000. And with this, what we're looking at weak markets, weak stock markets, and futures in agreement of that. The only things that look to be strong are volatility index and the fear index, as well as gold. So gold is holding as a store of value, and also in turbulent times where people want to convert basically their resources into something that will hold value. So today, week, still in that channel drop, as I was saying before, and we're still prior to November. So could this drop further? Yes, absolutely. But I still think they're going to try to manage these markets all the way up until November. But we'll see what happens. Nothing major spiking right now. So we've got low volume, muted price action, leaving a week in print. We've also had Asian markets were down. So that has a large effect when the Asian markets are weak and then also European markets weak. They've got a lot of turmoil going on there, as we've been speaking about with the riots and everything else going on. So, with that, let's take a look at the calendar of earnings today. It's jobless claims. So, really, the focus is unemployment. And as we were speaking about before, it's going to have to rise prior to the Fed cutting. We've got a Fed speaker today, and then not too much on Friday. So, a couple of things I would like to mention, other than these are the expected reported earnings coming out today and tomorrow morning prior to market open. JP Morgan is saying that three-quarters of the global carry trades are now unwound, which I find very interesting because, again, this carry trade is leveraged. And there are a lot of private funds, so maybe they're only talking about theirs because it would be really difficult to measure the remaining amount, but we'll see how that comes through. I do believe a lot of that did at least unwind and have its effect where the markets can really recover from that. So with this, we've got Warren Buffett now owns more Treasury bills than the Fed. He added about $40 billion worth. So of course, this is his company, and basically, in times of turmoil like this is his favorite plan. So he's done it again, gone into a lot of bonds, and that I believe that's something to really watch. So, with that, just a few other things I would like to mention. First is this is kind of the doom and gloom spot here, but we got New Jersey, the streets or rivers from the flooding, and this is all from that Hurricane Debbie that came through. I was delayed personally because they had issued a ground stop in New York, and then also with all of this flooding at several of the airports, storms, power outages, it's leaving quite the mess. So with this, also just not long ago, a few hours ago, there was a 7.1 magnitude earthquake that hit Japan, and they've issued a tsunami alert in several areas. So with this, we've also got volcanic activity up. And then your riots. So we've got wars, rumors of wars, more riots. Putin allied promising to destroy Ukraine. This is after there was a raid on Kursk. So they're basically considering that home territory, and their patience, I think, is really wearing thin. So with this, we've also got threats coming from the Iranian army commander now that Israel cannot be saved from annihilation. So just escalation, but then also a lot of this is mainstream media kind of picking it up and exaggerating a bit. So be cautious because they are still, pushing the Russians and Iran are bad, China is bad, and, kind of driving the narrative. So, with this, one thing that is positive, I think, coming out in the mainstream media, they're finally beginning to actually mention the Federal Reserve in a different capacity. So now they're talking about it as a central bank, even though they're still kind of pushing it as a type of government backed or official, and it is not. It's not federal, and they have nothing in reserve. It's a misnomer. However, they are beginning to talk about how powerful it is, which is correct, and how it affects our daily lives, or at least the quality of that life. So, with that, we've got several things we can still do. Moving our assets, getting into things that are um, less under their control, things that we can basically self custody. So, with that, I wish you all a wonderful trading day, a great day in general, and until I see you again, stay free.